Greetings, Daryl Woods here. You know, it's always the goal of the Mortgage Forum and our business partners to keep you up to date on industry changes. Today we're going to be bringing you some important information on the newest code change by lending giants Fannie Mae and Freddie Mac, set to affect all residential real estate transactions starting May 1st, 2009. It's called HVCC, or Home Valuation Code of Conduct. Although the video you're watching stresses the importance to realtors, it's imperative to understand that this greatly impacts buyers, sellers, in every transaction going forward. Let's take a minute and listen to what our partners have put together to inform and educate buyers, sellers, realtors, and all industry-related professionals.
On Friday, May 1st, 2009, a new code is going to be enforced by Fannie Mae and Freddie Mac. It's called the Home Valuation Code of Conduct, or HVCC. HVCC has a significant impact on you, the realtor, and this video is intended to educate you on what you can expect.
HVCC requires that an appraisal be ordered through something called an AMC, or an appraisal management company. No longer will your loan officer be able to pick up the phone and call your trusted local appraiser. All orders will have to go through an AMC. HUD has not adopted HVCC, so your loan officer should still be able to select a trusted local appraiser for your FHA loans. However, some lenders will require all appraisals get ordered through an AMC, including FHA. VA appraisals, however, will not be affected. So be prepared for delays and start writing longer escrows. Your loan officer's hands are going to be tied with respect to rush files from this point on.
Essentially, HVCC is designed to cut off our relationship and, more importantly, our communication with our local trusted appraisers. Once it's ordered, all communication regarding the appraisal has to go through the AMC, and then the AMC will confer with the appraiser. Clearly, this is going to cause delays and frustrations, so be patient. Your loan officer is in this with you and wants it done just as quickly. The quality of the appraisal ordered through the AMC will more than likely suffer as well. The reason is that the AMCs are taking up to half the appraisal fee to facilitate assigning an appraiser to the transaction. This means that experienced appraisers will have to do twice the appraisals to earn the same amount of money. Hence, they'll be forced to rush their work. It also means newer, less experienced appraisers will start showing up to your transactions. So have your ducks in a row and hand over as much information you can supporting the sales price when the appraiser comes to inspect the property.
If your buyer's loan is denied by a lender and they want to get a second opinion by submitting it to another company, they'll more than likely have to purchase another appraisal. Some lenders are saying that they'll release their appraisals and they'll accept appraisals from other companies, but only if they meet their internal guidelines, which you know as well as we do, will be sketchy at best. So be sure to work very closely with your loan officer and your buyers to submit a complete, tight package to underwriting, because going for a second opinion now could cost your buyer hundreds of dollars.
And make sure your sellers are aware of what's going on as well. Do your best to make sure that they're priced as realistically as possible. The days of your local trusted appraiser giving the loan officer a courtesy call about value problems are gone. The more accurate the sales price is compared to recent sold homes, the better. Nobody likes surprises, including your seller.
And remember, HVCC affects every lender, broker and banker alike. Switching from one lender to another mid-transaction will only cost your buyer more money and will more than likely wind up with the same results. Above all, be patient as the entire lending industry works through this new way of doing business, and help us educate your buyers and sellers. If everyone understands what's going on, it'll make it a lot easier to get through the bumps in the HVCC road.
Now I know we all hate change, but in this case, hey, we have no choice. We need to ride the horse in the direction that it's going. Here are a few important things to consider to avoid unwanted hurdles. First, be realistic on perceived values. Whether you're buying, selling, refinancing, there's no more wish values. Make sure you contact a real estate professional to get the most recent closed sale in your area, or have them provide you with a current market analysis. This will help get a realistic view of your property's valuation. Secondly, be realistic with your expected time frames. The 30-day real estate financial transaction, that's gone. Whether you're buying or selling or refinancing, if you set your expectations for a 60-day close, you shouldn't be disappointed. Currently, all competitive lenders are being inundated with new loan applications. Most are still understaffed. Turn times for underwriting, doc preparation, and funded loans are right at about 30 days right now. Throw in the new HVCC requirement, you're looking at probably about 45 days just to get a loan approval. So realistic turn times are especially important when writing a purchase contract or locking an interest rate on your loan. Remember, we want to help close your transactions as soon as possible, but starting off with the right expectations, that'll save you a lot of stress as we approach the finish line. I hope you found this information helpful. Don't forget to contact us with any questions or needs. This is Daryl Woods signing out.